Hello, I'm Sharon Field, Director of the Planetary Health Equity Hothouse, and really just want to make sure that we start by acknowledging the first Australians on whose lands we're meeting from all over the country. I'm here in Canberra on Ngunnawal lands, and to pay respects to elders past and present, and for Indigenous colleagues joining us online to pay my respects and acknowledgement. I'm sitting here in the office with the window open, which is surely a sign that we're turning a corner coming out of this horrific winter in Canberra. For those of you, elsewhere in the country, the gorgeous weathers that you get to enjoy, please think of us in Canberra when it's -2, -5 overnight. It's shocking. Anyway, so I'm very pleased to have the window open today. So great to join you all. As you know, the Planetary Health Equity Hothouse runs these the webinar series, modestly titled Saving the World, where we really do want to speak about these big structural issues that are contributing to planetary health inequities, and by that we mean the inequitable enjoyment of good health in a stable Earth system. And of course, this intersection of climate change, inequality and poor health, we think are some of the biggest challenges that we have today. There are many of them, of course, as we know. But so it's really important that we think about these issues that sit across a whole variety of domains, whether that's in public policy, whether it's in commercial activity and practices, institutional societal norms that are contributing to these issues, these problems. And so I'm really delighted that we're joined by Naomi Hogan. Naomi joins us from the Australasian Centre for Corporate Responsibility, where her job is on a daily basis to think about some of these big issues. She's the company strategy lead at ACCR. And Naomi has a wealth of experience in campaigning, in research, in advocacy around, particularly around the impacts of coal and gas projects. So really bringing that wealth of expertise to this big thorny issue of how do we stop new fossil fuel projects? How do we ameliorate the challenges that we've got from the existing fossil fuel projects? So Naomi, really delighted that you're able to join us today. Over to you, and then I'll just give a few remarks at the end of your talk, and then we will, of course, open up for a discussion with the audience. So thanks a million, and over to you, Naomi.
Thanks so much, Sharon, and thanks everyone for joining. It's a great pleasure to be here. I'd also like to acknowledge country. So I'm joining from Awabakal country here in Newcastle. The place name for this is Mullumbimba. And for the Awabakal people, this was the place of seagrass. And now Newcastle is more well known for being the place of the world's largest coal port. And that certainly influenced the work that I do, and that sense of place, seeing those coal ships come in and out every day and the coal trains rattling past, is a constant reminder for me that we still have a long way to go in terms of shifting our economy and our societies off fossil fuels and onto new energy sources and other ways of doing business. So I'd really like to acknowledge the Awabakal people, and also acknowledge all of the First Nations leadership here in Australia and internationally when it comes to climate justice, when it comes to fighting for health, land rights, protecting country from major new fossil fuel projects, and also for really wanting to play a constructive and co-ownership role in the renewable energy that needs to be built out into the future. So I really want to acknowledge and respect all of that work that goes on by First Nations people. A little bit about myself before I get into the slide presentation. I graduated from the ANU in 2006. I did a science communication degree there, which has really helped move me through my career and has provided a great foundation. After I worked, my first major role out of the ANU was with the New South Wales government, where I worked with a fantastic team and also learnt a lot about the power of the fossil fuel industry in New South Wales in terms of influencing policy. And that helped shape roles that I've taken since then with the Wilderness Society and with the Lock the Gate Alliance, and now with the Australasian Centre for Corporate Responsibility, in looking at the impact of fossil fuel companies in this country, the role that they play, and the different ways in which we can prevent new and expanded fossil fuel projects, from working with frontline community members, farmers, traditional owners, to protect water supply, all the way up to working with investors in these large global corporations to improve practice. And that is the major focus of my talk today, and I'll draw from work that we do here at ACCR. So with that, I will share some slides with you. And hopefully this works well. So I've titled my presentation today, How to Win Friends and Influence Fossil Fuel Companies. And I'll speak to why I think all elements of that are really important in the work that I do. So a little bit about Australasian Centre for Corporate Responsibility. We have a fantastic team here of about 30 people. We are multidisciplinary and have a lot of expertise from all different people from different walks of life, looking at shareholder strategy, equities analysis, climate science, legal risk, communications. A really fantastic team. And in fact, many of the slides that I'm using today are not my slides. They were put together by my excellent colleagues who have different expertise in different areas of the work. And I'm going to give a snapshot of some of the work that we do. A major focus for us is to work with institutional investors. So those are the investors that hold major heavy emitting listed, so publicly listed companies. And we engage with those investors to help enable them to manage better for physical climate risk and other transition risk. And we see it as really important for investors in these companies to use their ownership stake, use their seat at the table to push for climate action, and to really try and encourage change. I'd like to start the presentation grounding in the latest science, and many of you would have seen the news this week that we've just experienced 2 of the hottest days on record. Really concerning. We're obviously not feeling it here in the Southern Hemisphere where we're shivering through winter. However, globally it is very unseasonal and concerning. And here at ACCR, we have an in-house chief scientist, Dimitri, and he put together these next couple of slides just demonstrating how concerning the temperature is that we're seeing at the moment. So this graphic here demonstrates all of the grey lines are the temperatures that have been measured on Earth since 1940. You can see the orange line is last year, where we started to see from about the middle of last year a major deviation from our regular global temperatures, much higher than what we'd seen in the past. And that trend in the darker red has continued this year, with temperatures being well above global temperatures. And I actually updated this slide this morning because we had the hottest day ever recorded, and then it was revealed that actually the day after was even hotter. So we saw on the 22nd of July that temperature there. Interestingly, it's similar to a temperature that we saw last year, but last year was an El Nino, which is typically associated with warmer weather. We're not in an El Nino stage now, which is causing scientists even more concern as to why we're seeing such high temperatures. Relatedly, and also potentially, and Dimitri sees this as more concerning, the temperatures in our oceans currently. So again, this chart similarly shows in grey all of the temperatures recorded in the ocean from 1940. And again, from middle of last year, or even earlier, so from April, May last year, major deviation, huge rises in temperature for our ocean. And you can see that in the lighter orange line from last year, and then continuing that trend for the first half of this year in 2024. Really high temperatures in our ocean. Now, our ocean, as many of you will know, is sucking up most of the heat that is being produced due to climate change and global warming. That has major implications for our global climate systems, for oceans, coral reefs, etc., and is one that is really worth watching and is quite concerning. I'm going to move from the science, which obviously drives the urgency in terms of everything that we do, to the presentation that I'd like to give on winning friends and influencing fossil fuel companies. And I do want to spend some time on friendship, and it may not seem very scientific, but it is hugely important to the work that I've done and what I've learned through my career, but also for all of us and everything that we do when it comes to climate justice and any of the other issues that we work on. It's foundational in building the networks that are needed to create change in this world. We simply can't do it alone. And I've certainly experienced that it's a way to learn from others and to feel inspired at the incredible work that so many people are doing here and around the world when it comes to climate change. And also to seek out and find and build up change agents in different networks. So to really seek out different people with different life experience, but who also have a major role to play within their own sphere of influence in terms of climate action. And lastly, it's just much more fun to do this work. It's a slog, as you'll know. And the stats and the temperature updates that I've just provided, it's not good news. It's very sobering work. But to build the relationships and to make sure we're enjoying ourselves alongside one another in this struggle is absolutely crucial. And the photo here is just a little photo I took at an AGM for Origin Energy back in 2018 with friends that I'd made from across the Northern Territory, Scotty and Nick, May, Stuart, who were fighting on the front lines of fracking projects that Origin was proposing at the time. And this was them meeting in Sydney with everyday investors, people who had a stake in Origin via their superannuation fund, that also wanted to push for a change in the company and to see it stop supporting and driving new fracking gas fields across the Northern Territory, which Origin did end up changing its position and moving away from. In terms of why influencing fossil fuel companies is part of the work that we do, this is just a quick graphic to demonstrate that in terms of the contribution to global warming that we've seen, a major component of that is due to the mining and burning of fossil fuels. And so the brown line at the bottom here is the land use change emissions, and the black line is fossil fuel emissions, and the red line is the total in terms of annual CO2 emissions, noting this isn't all all emissions. This is CO2 emissions contribution, which is a major one, not the only one. Methane and others are also incredibly significant, but this helps demonstrate the role that fossil fuels have played, and also demonstrates that since the Paris Agreement, which was a major global agreement that many of the companies and fossil fuel mining and burning countries have participated in, we have still seen a rise in emissions associated with fossil fuels since that agreement, and that is what we need to change. The other part of fossil fuel companies is not simply for the emissions that they produce, but also the political power that they have. And I've just got a couple of examples here. One recent example from the US Senate and a House committee looking at and research and records from the 1960s that demonstrates that major oil producing companies there absolutely knew about climate change and worked on a deception campaign that was first to deny the basic science of climate change and then to move into a more sort of deception, disinformation and doublespeak, which we still see playing out today. And on the other side of this screen here is a recent influence map report looking at some recent advocacy here in Australia around the future gas strategy, which again just demonstrates that very recently we saw companies and industry associations in the fossil fuel value chain across Australia pushing back on referencing the need to reduce fossil fuel demand, that were strongly advocating for new fossil fuel gas supply and investments, and also concerningly was seeking to undermine Australia's capacity investment scheme, which is designed to help bolster and support investment in renewable energy and capacity, and we're trying to see fossil fuels able to be a part of that scheme. I also note that just today we saw media coverage of the Business Council of Australia seeking to undermine any attempts to include climate change references and the ability of the EPBC Federal Act to consider climate change consideration in its assessments of new projects. So again, this is an issue that's been going for a long time, but as recently as today, we're seeing the big corporations here in Australia advocate against good climate policy, which is, incredibly concerning. In terms of working on investors and why they play such an important role, this is a little screenshot of another civil society organisation, Urgewald, based in Europe, that found that there's about $4.3 trillion that is invested by investors for publicly listed companies and other oil, gas and coal projects globally. So there's a huge amount of capital that's flowing into fossil fuels right now. And there are many different strategies to try and tackle that problem and to deal with that. And certainly for ACCR, we're looking at opportunities to work with and engage with those investors that do have a climate mandate and that do want to see a change in practice at the companies that they invest in. In order to do that, we as ACCR hold a portfolio of companies that are heavy emitters, and we do that in line with the IPCC and its clear call out for the deep, rapid and sustained greenhouse gas emissions reductions. And we make sure that the investors in these companies are thinking about that, as well as the companies themselves. We are also communicating new research that's coming out around the physical climate impacts and the material systemic risk to economies and to markets that warming to date has locked in a global income reduction of 19% over the next 26 years. So really seeking to pull out some of that data that speaks to the economic considerations that many of these funds need to consider as long-term investors. It is obvious to everyone in the space that the Paris Agreement and the target to keep warming within 1.5 degrees is absolutely at risk. This means we are likely to see irreversible tipping points like coral reef ecosystem collapse, ice sheet collapse, permafrost thaw, which has major implications for local communities and for our global economy. And just to note that while the transition isn't happening in line with what's required by science and to keep to 1.5 degrees, it is happening. And so even for those investors that are not as concerned about climate change, there are changes at policy levels that are happening, and therefore those transition risks are live and need to be understood by investors in these companies. So in terms of where we hold stocks, it's focused on 3 sectors: steel and diversified mining, oil and gas, and thermal coal and utilities. And I'm just going to run through a snapshot of some of our work across those 3 sectors to give you a bit of an insight into some of the work that we do. So firstly, to start with diversified mining, this has been a big project of ours here at ACCR because of the scale of emissions that we see from some major Australian companies. So in this case, when we look at emissions, both scope 1 and 2 operational emissions and scope 3 emissions, so downstream emissions, Rio Tinto is the largest emitter amongst its peers in diversified mining. We've also got BHP there as an Australian company that comes up high there. And what we see when we look at the emissions profile of Rio Tinto, for example, is that the bulk of those scope 3 emissions are due to the processing of its iron ore to become steel. And that downstream process is what's driving these huge amount of emissions. And that's why, and I'll go through our focus on how can we decarbonize steel and how can we change that to really pull out those emissions from these companies, scope 3. And just to note, in terms of other big polluters in Australia, if we were just looking at scope 1 and 2 emissions, the biggest polluters here in Australia would be our energy providers. So AGL, Energy Australia, Origin, for example. Putting that to one side, I'm going to run through the steel issue. So basically, when we look at the steel industry, we see that the major amount of emissions, in fact, 90% of the emissions, are because we're relying on coking coal or metallurgical coal to be mixed with the iron ore that we're pulling out of the Pilbara here in Australia. It's going into a blast furnace to make iron, and that then becomes crude steel further down the line. And that process there of mixing coal and iron ore in a blast furnace is where we're seeing 90% of the emissions from steel, which are significant depending how you measure it. Anywhere from 9 to 11% of global emissions are due to the steel industry. Another way of looking at this is in this chart here. So here are the various parts of making steel, and you can see that iron making process is the vast majority of emissions. And so we're really trying to think about, okay, how can we, and many other people are thinking about this, including some great researchers at ANU that we've been working with a little bit, how can we get rid of those emissions? And we have also been having conversations with investors about their perspectives. What we hear usually in the media and from companies that have an investment in metallurgical coal, like BHP, for example, the story is that we're going to need metallurgical coal in steelmaking for a very long time. It's right to invest and to grow metallurgical coal mining. We can't make steel without coal. We went to 500 global investors from right across different investment firms globally to find out their perspective on metallurgical coal. And interestingly and overwhelmingly, we saw results, and not just in Nordic countries, not just in Europe, but across China, Australia, yes, the UK, Nordics, Japan, where there was actually a strong feeling from investors that we will not see long-term requirement for metallurgical coal in steelmaking. They acknowledge that change is underway and that change will happen in the coming decades. It will happen sooner than the end of life for many of the metallurgical coal mines that are currently being invested in or expanded. That was really interesting to us because without sort of that data, the story is investors and companies think that metallurgical coal is just, it's a goer. It's a forever thing. No, in fact, it is in transition, and there are transition risks associated because we're seeing changes. Now, the way to make those changes is to change the process of making steel. And another part of the research we've been doing is to really go into detail on what are the various iron ore producers doing when it comes to changing technology to make steel. And we mapped out across the iron ore makers here whether they're investing in new projects that have strong green potential, so that don't need any fossil fuels, don't need any metallurgical coal, those that have low carbon potential, so sort of meeting it midway, but not pulling out emissions completely, and then those of limited potential, things like trying to add CCS onto a steel production plant that uses coal, for example. And interestingly, we were able to measure different companies against one another. And I mean, one thing I'll pull out from this is that there's clearly some mixed results at Rio Tinto and BHP. Interestingly, BHP is also still a metallurgical coal miner and producer, and they have a stronger preference for research and new projects that just rely on sort of tacking CCS on the end and hoping that will work eventually so that they can continue to use coal. However, to their credit, they are investing and partnering with others to also look at truly green technologies. And part of the work we're doing is to help build the momentum and the conversation and the transparency around what exactly are they doing, where is the money going, and what can we see on the horizon in terms of investment in genuinely green technologies, to really, again, gets back to pulling those scope 3 emissions out of their portfolio, which they say they want to do. So this is about trying to be transparent about that and move it along. And one of the ways we've done that recently with Rio Tinto, which was quite productive, we worked with some of their investors and with the company, and were very clear that they weren't disclosing to the market enough information about how much they were investing in genuine green steel opportunities. What was their plan? We were seeing a lot of high-level announcements, but not much in terms of capital allocation, timelines, who was on the job, and so managed to get a public commitment from Rio Tinto. Before its next AGM, it will start to disclose more of that information, which again is just a first step, but proper disclosure can then help with measurement, comparison, and continuing to bolster that conversation around what's needed if we're genuinely going to bring down emissions. I might shift gears now to one example from oil and gas. ACCR, my colleagues have been doing a huge amount of work on Woodside. It's a major polluter here in Australia and globally in terms of gas, and also has large expansion plans. We have, this is from public research that we put out earlier this year in the lead up to Woodside's AGM. And I might talk you through a little bit of it basically. And one of the things that we've been doing with many of the oil and gas companies that we cover is to understand their position that, oh, we need more gas, plenty of gas for the transition, we can afford to grow our gas portfolio. But when we look at the science and look at the global carbon budget that we have remaining, and that's what you can see here, there is a limited carbon budget available to us to try and meet the temperature goals of the Paris Agreement. And when you look at the pink here, so all of the current operating and oil and gas projects that have been approved by their boards to go ahead, we're already over that carbon budget. And then we're really concerned and actively talking to investors about those pre-FID projects. So projects that have not yet been approved by the board, have not yet had capital allocated to them, but would absolutely blow that carbon budget. And there isn't room for more of those projects. So that's a big part of the conversation that we're having with investors at Woodside and other oil and gas companies. And another way that we're framing this to investors in this company, and again, using some of the strong expertise from colleagues, is around the cost competitiveness or otherwise of their pre-FID projects. So really trying to have a careful look at whether or not, we know that investing in these new expanded projects at this point is not in line with climate goals, but is it actually also going to be profitable? And often the answer to that is no. For a range of reasons, these projects haven't yet been developed because they're hard to access, come with additional risks, bring additional costs, and increasingly, depending on the longevity of that project, might be trying to sell gas into a market that's already oversupplied, depending, compared to the way that the world should be and will be eventually curving down its emissions and its fossil fuel use. So these are the sorts of conversations that we're having with investors in Woodside. And interestingly, just recently at the AGM, Woodside put its climate plan to its investors for a vote, which it has done before. But in part, I would say, due to the incredible advocacy and insights and research of colleagues at ACCR, the majority of investors voted against that plan. That was historic. It hasn't happened before anywhere in the world where a climate plan has been rejected by that majority. So Woodside has a lot of work to do, and we think needs to completely shift its forward strategy in order to have a credible climate plan. One other example on the coal front that we've been doing a lot of work in over the last few years is Glencore. Glencore is listed on the UK stock exchange, headquartered in Switzerland, but is a major coal miner here in Australia, and have projects that they're seeking to expand. And we became really interested in this company because it's making really strong climate commitments globally, but when we look at its actual activities of its coal business here in Australia, it has a number of coal expansions. So again, we really dug into all of the disclosures and aim to put information forward to investors in the company to really clarify and break down what's really happening. So this chart is one example of that. In terms of what Glencore itself discloses to the market, in simple terms in its climate plan, it's really these 3 red dots, which are its emissions reduction commitments that it makes to the market, saying that they'll reduce emissions by that much. We went through all of their disclosures from various coal mines and discovered that while it talks about winding down its coal business, we can actually see that emissions are forecast to stay broadly flat until about 2032, which is significant considering that coal is the fossil fuel that the International Energy Agency and others are really talking about. Those emissions need to come down this decade. This is one fossil fuel that we know how to produce power without coal. There's a huge amount of investment in renewables. We need to see those coal emissions come down. But unfortunately, at Glencore, we're seeing them flatline until the early 2030s. We also were able to compare the emissions from that coal business with what an aligned pathway would look like if Glencore was aligning with the net zero emissions pathway put forward by the International Energy Agency, which is the green line there. And as you can see, despite some early traction, I think, or reductions due to an inflated baseline year that I could talk about, but I won't. But in general, we're seeing a deviation from what would be a Paris-aligned pathway for its coal business, and we're seeing emissions higher than that. So that just, again, gives you a flavour of some of the work that we're doing to be clear on that. A few other insights in terms of what influences major investors, and this is from our recent investor sentiment mapping of 500 global investors. So we were talking with them about steel and about metallurgical coal, but I think it's really interesting, this statistic here in terms of what are the 2 most important risks for metallurgical coal mining, and that reputational risk or pressure from civil society or NGOs came in at number 1. And that says something about those different pressures. And it was very relevant for metallurgical coal. And I think that's interesting. And potentially that is also an issue that is being considered as a risk for other fossil fuel investments. Also, this concern came up quite highly around the high risk sector and fear of stranded assets. So fear that investments in coal mines today will not be able to produce to their end of life, and or whether it's infrastructure or whatever it is, and it won't see that return on investment because the world is changing and of those transition risks. So interesting that investors were seeing those as their number one risks. And also this insight on policy, which again, we weren't necessarily expecting, but is interesting to see. And this is one that we have really tried to communicate also to policymakers, that global investors understand the role of effective climate policy and see it as absolutely critical to impact the decisions they make as investors and how that impacts their investment portfolio. And again, to me, that demonstrates that there are so many different components of taking action on climate, of influencing markets, and the work that can be done by investors, by civil society groups, by companies to positively work with governments to create that space and opportunity for strong climate policy is crucially important. And we see that it will play out and will have, in this case, a positive impact on green steel investments if there are clear policies in place that make that opportunity clear to investors, which was, good to see. I want to end the formal part of this talk with talking about what people can do who may not recognise that you have a seat at these tables. So one thing to make clear is that due to policy set in Australia decades ago, many of us have investment portfolios that we hold through our superannuation funds. Superannuation funds in Australia manage trillions of dollars on our behalf and invest in these companies and across the stock market on our behalf. And that can offer a way for us to reach out to our superannuation company to have a say on the way in which they invest, but also importantly, from our perspective, the way in which they engage with companies to encourage forceful change to bring down emissions from the companies that they invest in. There are also opportunities if you are a direct shareholder, and many people have a suite of investments that they hold. And here at ACCR, we encourage people that do hold investments to be in touch with us if you would like to be part of a broader group that can bring change about at a company. And one way to do that we've been very successful with here at ACCR is by putting shareholder resolutions to Australian companies here by using and working with a shareholding community of everyday people here in Australia. In Australia, you need at least 100 shareholders to put a shareholder resolution or a member statement formally to a company in the lead ups to its AGM, and for that to be on the agenda for the AGM for discussion and vote. And we found that as an incredibly powerful way to ensure that an issue around climate lobbying is on the agenda for these companies to consider and for their investors to consider and vote on. And even if it doesn't get a majority vote, which is very rare, a vote of 10, 20% sends a very strong signal to a company that this is an issue that many investors do care about and have a view on, and therefore need to take more action to work on. And in some cases, we've seen the momentum so strong that management has actually agreed with the resolution, and we've seen a very high vote of 98% or more when the board actually agrees that, yes, this shareholder proposal put by a group of could include some institutional investors, but could also be a group of Australian people who hold shares in this company that want to see a positive change on this issue, has been really successful. And if you are someone that does hold shares in companies or would like to learn more about that, we have a shareholder hub and a team that works with people to make it really easy to play that role and to get involved, which is one really great thing to do. And also the other very strong thing to do, and again in numbers if possible, is to talk to your superannuation fund and really understand not only their climate policies, who they invest in, but how they invest, and interact with those companies, and whether they're a super fund that works with the likes of ACCR to try and bring change at these companies. That is the end of the formal presentation. I'll stop sharing.
Naomi, that was truly fantastic. Thank you so much. I'm giving you a clap on behalf of others online. It really, I haven't heard a kind of both an expose and beautiful demonstration of different sort of strategies and tactics in a very complex field. I mean, just marvelous. Just while people are sort of getting ready to ask you questions, I just want to sort of just a reflection really of, because everything that you've just described, and I learned so much. I mean, I didn't actually know all about the steel side of things. That was so fascinating. But what you've just described has phenomenal implications for, obviously, for climate change and wider planetary, the planetary boundaries issues. Incredible implications for global inequality, both sort of between countries and within countries. And you referred to a very recent paper from Kotz and colleagues speaking about those economic inequalities that are being experienced as a consequence of climate change. And in the health space, and certainly in the hothouse work, we're looking at how that intersection between climate change and inequality really matters for human health, health inequities around the world. And so I'm curious, in the discussions with the investors and with those companies, obviously they're interested in getting to their climate goal. Well, some of them are more interested than others in getting to those sort of climate targets. You spoke about doing this because it's profitable. They can see that it's a profitable thing to do. Is there any other sort of framing or incentives to these companies? We sort of, in the health world, we speak about there's all these incredible health co-benefits. If you act on these issues, it's got these health benefits, sort of further down the line, which is absolutely true. And I just wonder whether those framings or those issues, you think might cut any traction with them. And then my sort of second reflection, which was so interesting, of that reputational risk being something, and you sort of being concerned about, for these companies being concerned about what civil society and NGOs might say about them. Because some recent work that's come from a marvelous colleague in health, Catherine Cullerton, who has been doing some, well, she sort of went to, as part of her research, she went to a corporate affairs conference and really was listening to what folks across different sectors, different business sectors were saying. And she was very surprised to hear that they were saying exactly that point that you were raising, of they were worried. They saw that social media commentary by NGOs, by civil society influencers, could play a real role in shaping what the companies were doing. And I took great hope from that, and great hope from what you were saying of these effective strategies and tactics being used by people like yourselves and other NGOs can actually shift the behaviour of these companies. So yeah, I found your talk so provided me with a lot of hope. Actually, it can sound so overwhelming sometimes, but I took a lot of hopeful things away from what you said. But so maybe just I'm going to monitor the chat now for people's comments and desire to speak, and I see Tom has already got his hand up, but do you want to maybe just reflect on those different framings and whether that's useful or not? And then Tom, I'll come to you next.
Thanks so much. And yes, firstly, absolutely agree that there is a lot of hope to take from this, and often it can feel so overwhelming. What's the point? We're not getting anywhere. It is getting somewhere, and we need to keep it up, and we need to keep looking at different strategies, using our own strengths, our own experience and networks to be creative at coming at these problems, because it is creating a change and is being noticed, absolutely front and center. In terms of the framing questions and in terms of health, one thing I was reflecting while you were speaking, well, there's two options. So one is a direct to companies causing the damage, and the other is to investors that invest in those companies, but also have a suite of other responsibilities. So on companies, for many decades, have been incredibly careful and have put a lot of energy into their health and safety record. And so one frame could be to let's look outside of, there are very important health and safety indicators, but climate change and the impacts of climate change is getting to the point where that's bringing additional health risks to their own workers, depending on the site, whether it's heat stress, severe weather extremes, increase in diseases that we're seeing linked to heat, a suite of things. That could be an option to start getting the board of directors at these companies, who they always have someone that's on health and safety on the board. What are they doing about this angle? Could be another way to have that conversation. And then secondly, in terms of investors, increasingly we're talking to, big, managing trillions of dollars for people who have retirement savings that are still decades away from retirement. We need to see them really thinking about the long term for those investments, and really thinking about the health of the people that they're saving money for. Yes, financial returns are incredibly important, and that is their job. But if the economy and if our health system is going to be radically different in a couple of decades because of climate change, how are they managing that for that? And how are they building that into their engagements with companies? What policy do they have written for that? Often it's a staged approach. As much as there are wonderful people working within these funds that are very aware of climate change, until they have a clear policy mandate within their teams, they can't do a lot. So building in new policy perspectives for them to consider as long-term patient investors could be another way. So there are a few initial thoughts.
Brilliant.